All right, we're going to take a shift from our normal dividend talk that we normally discuss on the show. Today we've got Jonathan Romero on the show. We're going to be talking about interest rates in the housing market, which I can't wait. And as always, please subscribe to the show. We'd love if you do that. But I shouldn't say as always. I always forget, if anything. Let's talk about the housing slowdown. You know, it's definitely been a different environment out there. I feel like back in the, a couple years ago, it was like every time you turn around, the sign would go up in their yard on a Monday, and by Monday morning and by Monday lunch, it was like, is that
right
under contract?
Right.
Like, what the heck? I didn't even get to walk through it, And now it's like, signs go up and it's like coming soon. Right. And then the sign will come up and it'll stay up for a little while. So the environment, I feel like, has definitely changed.
Yeah.
So I guess let's start with I think the most important thing. Where are rates? What are going on with rates right now?
Yeah, good question. Well, first of all, thank you guys for having me here. Good to be with you guys and just to be able to share a little bit of my experience in this crazy market. But currently,
you're at Movement Mortgage. Movement Mortgage.
Correct. Yeah. Yep. Movement Mortgage and our family of companies. I'm actually with Movement Bank, which is a fun new venture for the Movement family. I say new. It's been like 7 years. It feels new, but so
the newest.
Newest. But rates are hovering in the low sixes, which is the lowest we've seen in the last 12-month cycle, right? So it's a favorable place for rates in where we've seen recently. But I think, to your point, it definitely feels like the temperature has changed, and I think it'd be good to kind of backtrack just a little bit to see how we got here. I mean, since the crash of 08 to 12, we've been on a run. Rates have been really low. Housing's been doing phenomenally well. But then the pandemic hit, and that shifted everything.
Just went bananas.
That changed expectations greatly.
It's you guys are in the markets. It's like investing in NVIDIA before, NVIDIA took off or something, right? Like it would have been what you would normally want to see, let's say 50% return over a 10-year span is pretty healthy for a real estate investment. It's supposed to be slow and steady and long-term hold. Well, we saw that in an 18-month window between mid-2020 to about, early 2022.
Yep.
And so in just that short amount of time, interest rates were dirt cheap, 3% or less. And home prices were still on par, pretty much unchanged from a decade, with just nominal, 2 to 3% gains per year. And all of a sudden, 2020 came around, and the equity increased by 50% in only 18 months, and then rates went from 3% to 7.5%. Right. And when those two things happen, you have less affordability.
Yeah.
So that's how we're here. And that's why we kind of came to a screeching halt in the market.
And I feel like you still have a lot of sellers who are expecting that same return, even though they probably bought their house in 21 or 22. They're still wanting that huge increase a lot of times. And
Absolutely.
It's like, that's not the market we're in anymore.
Well, and the challenge is they have a lot of equity in their home, but they look at the prices of the houses they want to buy, and they see that they're actually making a lateral move. They're not making a step-up move. They're priced to the point where what they sell their house for is what the next house is going to cost, and it doesn't feel like much of a benefit to give up their 3% rate.
I was going to say, and pay more in a rate.
Twice higher. So that's certainly a challenge.
What does a homeowner do in that regard? Like if you've got, this expectation that, I bought my house for $500,000 and I'm hopeful to get, $700,000 for it, and I want to go buy a steal somewhere else. I mean, is that sound logic in this environment, or is that like pie in the sky?
I think it really depends on what your goals are for your home, for your family. I have this conversation constantly, and if you're just trying to put it on a spreadsheet, it's really difficult to math out. Right. It really is.
Right.
But at the end of the day, if your family has grown, if you are creating a new household, if you are, stepping into a stage of life where you need to make a move, then I don't think you're losing in this market. It just feels like there's not a whole lot to gain if you're just moving to move. And I say that I don't feel like you're losing because, again, you've got tons of equity. You're going to roll that equity into the new property. Rates are a little higher, but you're going to be borrowing much less than what you initially borrowed when you bought that last house. And so you're able to transfer that cash and, make that transition without having to really kick yourself or thinking that you made a bad financial decision if you're forced into it. But just a leisure move, we're not seeing a ton of that. Right now, we're seeing actually the 25th month, straight month for rent price decline. So actually, there's more mobility happening right now in the rental market, which is the precursor for the housing market and purchases. And it's an encouraging thing to see. But what the data shows is every single age group between 18 years old to 65 plus, and they're segmented in decades, they're all among the top 3 reasons it's more affordable housing. They're all looking for more affordable housing. And though rents are declining, I don't see home prices coming down, right? I mean, we're not going to see a big pullback in home values. We saw this from the 70s to the 80s with that inflationary cycle. Home prices went up 117% in just one decade. And I think when we look back from 2020 to then where we'll end up in 2030, we're going to see something very similar. We're just going to be in a brand new economy. That certainly feels like that. I know you guys play in this space a lot, and doesn't feel like we're going backwards at all.
Yeah. So from 2020, I don't know if you have this number off the top of your head, from 2020 to now, how much have houses increased?
In most metros, at least 50%. At least 50%. So as a first-time home buyer, we're in Charlotte, North Carolina, right? If you're buying a property for first-time home buyer, starter home was $250,000 pre-pandemic. If in 18 months, by 2022, let's say 2023, you're now wanting to get into the starter home market, 50% increase means that same house is now $375,000 for the same house, but you were financing it at 3% during the pandemic or prior. Now you're financing that same house at 7.5%, or in this case now down to about the low sixes. And it's really priced a lot of folks out of the market. Right now, there's only 1.4 million buyers in the market, which is very under.
How many sellers?
36% more sellers than buyers in the market right now.
Is there a positive spin on this? Because there's more sellers than buyers, does that mean negotiations are changing a lot?
Oh, absolutely. Yeah, absolutely. Right now, about 40 to 45% of sellers are paying their buyers' closing costs, just offering it right up front. They're saying, hey, you come buy this house, I'm going to cover 8, 10, 12, 13 grand of your closing costs. We're seeing it with builders a lot, offering incentives as well. There's definitely some negotiation room. And like right now, we are in a full-blown buyer's market, but you wouldn't believe it because the news tells you it's a horrible housing market. Yep. Well, guess why it's bad? Because the buyers are winning. The challenge is it's a lot more expensive to buy a house today. And I just don't think the challenge with that message is that we're leading them on to think that it's going to be cheaper again someday. So you might as well just wait. The only thing that's going to get cheaper is the rate, but that's not going to bring that house price cheaper, right? That house is not going to go back from $375 where it is today to back to $250 to fix this affordability issue.
And I'm sure wages are just going to spike. All these employers are just going to give people 20% raises so they can afford this.
Exactly.
That's the hard part too, the feeling of the wage.
Right. That wage crunch is very difficult. And along those same lines, it's not like we have a very high unemployment. I mean, right now, more than 95% of the country is employed. We're only at a 4.3% unemployment rate. So any econ book's going to tell you that we are fully at capacity, maybe some government sector stuff here. But with a strong employment sector, wages do need to go up, but people are working.
Right.
And, record high equity, record high stock market, record high, even commodities, gold prices are at record highs. I mean, you look around and everything's thriving, which is why some people are saying they don't see interest rates coming down anytime soon. There's really no motivation to spur the economy any more than where we're at.
Other than the president that wants them to come down.
Exactly.
Refinancing some long-term government debt.
Absolutely.
Because if you really want to push the economy forward, you have to have cheap cost to refinance, cheap cost to take debt.
Yeah.
because that's what
Yeah.
spurs growth.
Well, and
Money
it's like
spurs
here
growth.
in Charlotte, I feel like a lot of the movement in housing is like necessity based, like what you were saying. We have to buy a new house because we're outgrown this one. Or,
Right.
I think I read the other day that there's 150 plus people moving to Charlotte every single day is what it averages out.
Popular place.
So, I mean, when you have that, these are the people that are making those housing transactions.
Absolutely.
It's not I just want a new house because I want a new house
right
type
right.
scenario.
Yeah, and the challenge, housing is a bigger issue when you think about it, like from just the supply and demand perspective too. I mean, we've been undersupplied for a long time.
Mm-hmm.
Now there's some headlines saying that we're now at where we need to be for supply, but again, that's because you only have 1.4 million buyers. If rates can hang around 6% for, let's say, a 6-month window or longer, that would bring in about a total of 3 million. So the 1.4 will double, closer to 3 million buyers will now enter the market because of that same affordability range, right? It brings that monthly payment down low enough where more people, not everyone's going to buy,
Sure.
but it just, widens the pool of potential buyers out there. And, you're still going to need more housing for those. Builders have a tough job because, labor shortages, permitting costs, and the bureaucracy of getting permitting across the finish line, and then just the lack of land, in some metro areas. And so Charlotte experiences all three of these, and so we have a lot to work on. But it is good that the demand is still there, where people are looking for Charlotte as a place to move to.
And it looks like, I was talking to a buddy who's in kind of the new build space, and he was saying, we're kind of keeping our prices the same. We're just reducing the square footage of the house to try to help with the affordability, because they used to be in a space where they were that first home buyer, maybe the second house. They were the builder for them. And he's like, okay, we'll just keep our prices where they need to be, but we'll reduce the square footage of the house to make our numbers where they need to be.
There you go.
So you're not getting as much house for this, what you used to.
Yeah.
So it's an interesting kind of thought.
Right. It makes sense. And I think that works. And people are going to get a lot more resourceful. I mean, one of the biggest changes we saw here locally in Charlotte, for example, was they implemented this new building code last year. And one of the things was they got very lenient on ADUs, on accessory dwelling units, where Charlotte used to be a little more conservative in those rules. Now they let you, the setbacks are more lenient. They let you go a little larger with your accessory dwelling units. And this is just a sign of the changing economy. People want to rent them out, maybe for short-term rentals, or you have, maybe mom and dad used to just be able to go and live wherever. Now they want to combine multi-generational housing and find solutions for that and bring the family closer together. So things like that are happening. You're like, no way.
I won't hear too much. Jonathan's got them real close.
My folks are right next door, man. It's like a life hack.
God bless you.
When you got 2 young kids, I'm telling you, best thing ever.
Go see the grandparents.
Yeah, you don't have to pay for daycare.
That's right.
You can afford a little more house.
That's right.
So let's give our viewers some takeaways. Like, and this is a tough environment. I think about where interest rates used to be and where our expectations used to be. I mean, I saw people just selling their houses just because they could go upgrade, and the cost of the move was nothing. In some cases they were getting out of a mortgage of 4 or 5% or 3%. They were going into one at 1.8, 1.9.
Sure.
And now the expectation is so different because we're not so far removed from interest rates of, super low, 3 to 4%, and you could get above asking. Now you're having to give up all kinds of concessions, and then your expectation of what you're going to buy. Yes, you might be able to get a deal because you can negotiate, but now you're paying, in some regards, 50 to 80% more on your mortgage. So what are some takeaways, some practical advice you can give, somebody that has to make this move? Because I think that's the squeeze right now. It's the people that, we got to move. Like, I got a different job, or I just
moved to a new city.
Yeah, I got more kids, or my life has changed, which is requiring me to do this. What would you tell them?
Interestingly enough, most of my conversations are really just to pause and pray about it, and I just say, if you feel like the Lord is calling you into a new season, if you feel like you're being led into a need for some sort of change, and that's a greater calling, that's kind of this gut feeling calling, then we can try to, make the numbers fit in line with what your goals are. But you'll be in a position where the calling is greater than, what the spreadsheet numbers reflect.
Great
And
advice.
Yeah, that is.
I really
great.
think, I'll give you an example. This client really encouraged me and just built my faith up because, she started looking for a house and she's an empty nester now. And she was on a project with her job, but for about a year, and she was moving back to Charlotte. In the meantime, she had rented out her place. So now she was going to buy something new. And she was just so trusting in the Lord. She says, I know he's got the right place. I know I know it's going to happen. And she found the perfect place, great price, great deal. Everything checked all of her boxes, great area where she wanted to be. And about a week into it, she said, I just don't feel this peace about it. And so we leaned into that and just started having this conversation. Well, are you sure? Because you felt like, hey, this is it. And, you prayed on it and then checked all your boxes. She says, yeah, but now that I'm here, I don't know. That was in maybe about July, late July, early August. And here we are in September. And she called me this week and she said, you won't believe it. While I was on that project, due to some turnover, I had to fill in some empty roles. And one of those, I actually had to cover my manager's role. Well, I just got a call this week that now they want to send me on a project to Dallas and they're promoting me and they're going to put me in this role and they're going to do all these things. And she just continued to follow her gut, which is what inspired me and grew my faith because, we're talking about making these big decisions, these big choices. And I just believe deep down that the Lord wants to be involved in those. He'll close any door that no man can close and he'll open any door that no man can open. So just trust and know that there's a good thing for you out there.
I feel like we should pray.
And I was going to say, I was going to ask one more question, but I think I'll answer it with, because I've got a lot of new young couples. Should I keep renting? But my parents always taught me, buy, you're paying yourself, you're investing in your, and I think maybe that's probably the best advice because it is hard. We sit on the investment side and, the long-term financial play, and it is hard to get there on a spreadsheet, but it just gets to a point where you kind of just got to go with your gut and pray about it. So I think you just answered my questions for the young couples too. So thank you for that guidance and that suggestion.
From hearing you today, it really sounds like when you have comfort or you feel good about it and you've prayed about it and you can make the spreadsheet work out, it's still a great time to get into the market because you can't be sitting back waiting for this hope that it's going to pull back because the real likelihood of that happening is probably not there.
Absolutely.
So get in when you can, make the smart financial choice like we always tell our clients. Be smart financially, but when you can get in, go for it. Because you can always refinance if the rates really do change.
That's right.
Well, this has been awesome. Thank you, Jonathan. Of all the things we talked about today, the last bit touched me. Yeah. So that was great. So if somebody wants to get a hold of you, how do they do that?
You can find me at
you can look right here.
Yeah.
Romero Review on Instagram or jromero@movementbank.com.
Thanks for watching. This has been great.